The BMD Podcast, anytime you want. Hey everybody, welcome back to the channel. I'm your host, the BMD, on our show segment, MLB Major League Broadcasting. And we have a gentleman on today. His name is Pat Gibson. He is a financial planner and a wealth management in the industry of investments, life insurance, term permanent insurance. We haven't had anybody on the show talking to us about that industry. I'm fascinated to hear what Pat has to say. Good morning, Pat. How are you?
Very good, Mike. How are you?
Very good. I am the BMD and you're not. Remember that. Anyways, Pat, tell us a little bit about your background, how you got started in this industry, maybe right out of school. How was this your main course of interest?
Actually, I didn't get into it until later in life. I had other jobs, and then but I always had an interest in financial planning, and but I couldn't leave my job to follow that. So what happened was I got laid off from my current job, and that gave me the incentive and the reason to finally pursue it. And I haven't looked back. That was about 23 years ago.
So what was the change from the one job you had your interest in financial planning? Was it being laid off that pushed you right into that program?
Yeah, because I had no reason not to do it anymore.
I see. So what is...
I had a good...
Go ahead.
So I had a good paying job that I couldn't leave a good paying job to take a chance and try a new career, but that gave me the incentive to do it. There was no reason to not do it anymore.
So what about what is the job title, job status? What is a financial planner?
Well, basically you meet with people and you try and help them in their financial situation, whether it's from the beginning, young families with children and a mortgage, and making sure they're protecting themselves for the future in case something wrong happens or something bad like injury or disability. And then there's other issues like kids' education and everything else that comes along with having children. As you know, it's very expensive. And also working through all the different times of life to retirement and after retirement and estate planning and everything, the whole gambit.
So it is about a risk planning of protection. Is that the whole idea?
That's a big part of the job, yeah, because when someone's young and they have a family and kids and debt, you want to make sure that if something bad happens, that they're covered. You plan for the worst, but hope for the best.
And is it mortgage debt driven? So if there is a tragedy, it covers the balance of outstanding debt?
Yes, and provides for the future. So, for example, if a 25-year-old died in an accident and he's got 2 or 3 young kids, you want to provide for their education and their future too, not just the mortgage, but everything else, because that's an income that the family won't have anymore. You want to replace that income. So
the other side financial planner, on your business card, it says wealth management. So is that for the living on an investment side to grow their income or grow their savings?
Yes, to accumulate and grow and save taxes, do everything the most efficient way they can so that they have more when they're ready for retirement or when they have goals they want to meet, like buying a cottage or car or traveling, whatever they want to do. You want to make sure that they can achieve those goals and not have to worry about it. That's my job.
So can you give us a typical example first of all, if somebody has debt of, say, $250,000, do you encourage them to do 250 to replace that mortgage? So if there is a tragedy, they aren't pitched out of the house. And then let's say school for each kid, you've got two kids, is 25 grand. Do you try and tell them to take out a $300,000 insurance policy? Maybe explain. I know it goes to each different person on their needs, but give us a typical example. A lot of people don't know your industry. A lot of people might not have even talked to somebody, you as a professional. We have to break it down here so everybody gets to understand. Give us a typical example.
Well, excuse me. On the insurance side, what we do is a needs analysis. So we collect all the information, incomes, their situation in life, everything, and we work through that to see what benefits them the most as it pertains to coverage. Like some people could look at critical illness insurance. That's insurance that you have if you don't die. So life insurance, you get that paid out if you die. Critical illness is a different type of insurance where if you got cancer or had a heart attack and didn't die, then it would pay out to you. But then it depends on their income. Like life insurance can be rather cheap but temporary, or it can be very expensive but last you for your entire life and grow over time. So it's basically you do a needs analysis, and like you said, everyone is different. You can't just take a cookie cutter approach. And then there's the investment side also. Besides that, you got to look at RESPs, the education savings plans, tax-free savings accounts, RSPs, non-registered investments, and whatever else they have. So there's, and sometimes people own businesses. So you can invest money in the business or outside the business, and there's a lot of different aspects you have to look at.
Is it different for, say, an everyday husband and wife versus an everyday husband and wife where you're working, you're an employee with an employer versus you're in your own business, singularly, or husband and wife together in the business? How do you separate those issues or liabilities, businesses versus personal? Maybe take a second and explain that breakdown.
Well, if someone is an employee, depending on where they work, like for example, a police officer or someone with a big company, you look at what their pension plan is, and you include that in the calculations for the retirement planning. And pension plans can, depending on your job and position, everything, they can be very lucrative. And they also, you can get very cheap insurance while you are employed there. And also, for people who are self-employed, what I find with a lot of them is they're really good at being entrepreneurs and making money, but then the rest of it, they don't really know. They're good at making it, but then they don't know what to do with it. So that's where we help them, because they don't have a pension plan. They can maybe have to buy their own benefits, and it's just a different retirement scenario. It can be a very lucrative way of earning your income, like being self-employed. I know some people that have done extremely well, but it doesn't always work out that way. But when it works out, it's good. You're not restricted. There's no ceiling to what you can make, like when you're a police officer or an employee somewhere.
Is it more expensive insurance, let's say, being self-employed or being employed with a company?
Well,
I guess when the risk level, more risk, obviously, self-employed versus being an employee, or no?
No, if you have an individual policy, it doesn't matter. But if you have life insurance, like a group plan at work, then what happens is you get a certain amount of insurance without proof of insurability. If you want to go above the minimum amounts, then you can apply for more. But it's the cheapest life insurance you can get. But when you leave the company, you lose the insurance. Unless you want to buy it and take it as an individual policy, then it costs more.
What about You mentioned life insurance, and I know there's terms whole, permanent, and then there's also terms or term insurance. Can you
Mm.
explain to the listeners and viewers those different categories?
Well, term insurance is cheaper, and that's what something you would use like to cover a mortgage, for example. So a young couple, if they have a mortgage, like we are just talking about mortgage and education, let's say if we figured that they needed $400,000 in insurance because something could happen in the next 20 years before they're established. That's the cheapest kind. You have term 10 or term 20 are the basic ones, where every 10 years or every 20 years, the price goes up, sometimes dramatically. And also that type of insurance is not permanent, but it is much cheaper. And then you can get into the whole life and universal life. Those are permanent types of insurance that can carry you through till death, but you end up over time, the monthly expenses are generally quite a bit higher. But term insurance is better than mortgage insurance. Like, you know how if you go to the bank and you sign up for a mortgage, and they say, "Do you want do you want life insurance on that?" And you say yes. Then they don't do any underwriting or anything. They just say, "Okay, you got this much life insurance on your mortgage." It's not guaranteed to pay out. And I've seen that happen where someone passes away and then they look at the medical records. And if they find something in there, they can say, well, we wouldn't have been, we're not covering them because he had this health condition and they didn't know about it because they don't do underwriting first. Whereas with an individual policy, they do the underwriting up front. And so once it's placed, it's guaranteed to pay out. They can't say, no, we're not going to pay it. Where the mortgage insurance, they can, and I have seen that.
Do you recommend the type of insurance, permanent, whole, term? Do you decide that yourself on the person's medical history and condition?
Um, that
Like,
can
do
be
you
a
play a
factor.
part? Do you play a part in that decision making or advisement?
Oh no, the underwriters do that. I just collect the information and um, we do the assessment and everything, collect the information and the type of insurance that best meets their needs, and then that goes to the underwriters at the insurance company, and they do the medical investigation. If depending on how much insurance and what type it is, they might want a physical and everything else too, but they make the decision on if it's accepted or not. I can't have any say in that.
What's the toughest part about your job?
Uh, hmm. I guess it's getting people to listen, to do what's right sometimes. But I've been doing it a long time now. So the clients who I have that are well established, they know basically if something happens, like for example, last year when COVID first hit, or sorry, this year, I mean, last March when COVID first hit, the markets went down quite a bit. And I called my clients. I don't wait for them to call me. I call them if there's anything going on. And they all said, I knew you were going to say that. Like I advise them, just hold the course. This is nothing to bail out of the market or anything about it. Stuff like this happens all the time. It's the stuff, things interrupt the markets and we have corrections all the time, but it's always a different cause, like 9/11 and everything else. There's always a different reason, but the market always comes back. The market has never gone down and not come back up. That's just never happened. And sometimes people, and rightfully they're concerned when they see things like COVID or other issues out there that affect their investments, but it's generally, it's always temporary. Things come back up every time. You just have to wait it out and let the fund managers and the money managers do their job, and then it's proven. Like right now, we're even though all the COVID stuff that's going on, we're still having a good year in the stock market. People are making money, even though the world looks like it might be falling apart.
Mm-hmm. How has COVID affected your industry? I know you just tapped saying stock market's been more positive than negative, but the pandemic and COVID has to be a roadblock.
It caused interruption at first, but with our company, we have a lot of technology, and it was advancing where we were already starting to work with electronic signatures and remotely and things like that. We already were getting that kind of technology. And then when this happened, it just pushed it ahead by a few months, I guess. So it was just a matter of adapting to working at home and meeting people online is accepted now. Where, let's say, if last year, if I told my clients, I'm not going to come and see you, I'm just going to have a video chat with you or just a phone call, and I'm not going to come and see you, then they might think, well, what, you don't care anymore? We're not important now. But now they don't want me to come. Like this type of communication now is perfectly acceptable. And we can do everything online and through emails and text messages and everything. It's we're just moving forward like everybody else, and it's not any hindrance really.
So, what is the temperature with COVID in the industry? I'm kind of feeling and hearing from you. There's been really not too many roadblocks, and things are settling in. To your point, that perhaps it's the new way of life doing business. Do you favor that, or do you feel the lost connection with your clients, or it's a video kind of a robotic face kind of situation versus sitting down having a beer or a sandwich or a coffee with your clients?
Well, it depends on the client. Like some people would like you to see you in person. Other people are fine not seeing you because think too, if I'm going to go and see someone, they got to clean up their house and everything and make sure everything looks good because they're having company over. Whereas if we just get on the computer, they don't have to worry about all that. They can just have a quick meeting. You can even have a husband and spouse who aren't in the same house, and you can have a meeting with them. Mm-hmm. It just depends on the person. But so like right now, everybody's just fine with it. I haven't had any issues at all with anybody saying, no, you have to come and see me. Mm-hmm. It's just the way things are now.
Now, with wealth management, that side, you mentioned the stock market activity has been, let's say, more favorable than not. How do you know what to invest in or what to recommend during this kind of chaos in the world with, war, the pandemic, the panic, let's say, in everyday life now, and some adjusting, some not adjusting? How do you recommend or where do you get your knowledge about what to invest in?
Well, first we work with the client and see what their risk profile is and their time horizon. Like if you're young and you're saving for retirement in 30 years or more, what's happening right now isn't going to make a difference. Like this is not, you won't even remember this when it's time for retirement. So it's just, stay within your risk profile if you're moderate or moderately aggressive, and let the fund managers manage the money for you, and don't worry about it right now because and it's actively managed too. Like they don't just invest the money and then sit on it. They're out there. The managers are all over the world, some of the best money managers in the world, and they got their boots on the ground, and they know what's going on out there. And if you're invested in something more short term, like if you had a goal of in 2 years buying a house or something, or your kid's education is coming up, then you would invest that money differently so that when there's market fluctuations like this, it's not going to affect it. You want to be safe with that. The shorter the term, the safer you want to be.
Company you're with now, you've been there a while. You're mentioned 20 plus years. I assume you're happy with them. Do you have growth within that company, or do you, somebody in your position, do you think of change and, jumping the shark, or the grass is greener over with the next company? Or what makes it a good company for you to stay, say over 20 years? Why have you not moved on?
I'm comfortable here, and they've treated me well. They don't bother me. I don't bother them, and they're always developing and bringing out new technologies and new investment options and things like that. Sometimes they're like, it's a big ship, you can't just turn it overnight. But there's been some Just like any big company, there's been some issues where you weren't too happy about it or anything, but overall, it's been a very good experience. And I have confidence in the leadership that they know what they're doing, and it's the company is like we're having really the last few years they made some big changes, and we're having the company is doing very well.
So new technologies, are you able to say any of those on the show today on growth, or what make
Well,
or what separates your company apart from the next neighbor?
Well, we're more into financial planning. Like we have actually we just had new software rollout last week, very advanced financial planning software, where what we're going to do is like I'll enter all the information into the system, and then we can share that with clients. They can go online and actually they can't change a whole lot, but they can play with it and look at different scenarios. Like we would put all their information in their Canada pension, old age security, their pension plans, their kids' education, they're selling their house, they're buying the cottage. We can put all that into a plan, and then we have these what if scenarios where we can say what if inflation is higher than we thought, or what if you don't live as long as we thought, or what if this or that. Like we can put scenarios in and change it to see what their plan will look like in all these different scenarios, or what if this or that. And it's very advanced and very intuitive and easy to understand for the client. It's visual, so they can basically see how their plan is working, and then if we make some changes, they can see that, and it's very very easy to understand.
What do you do, Pat, when you obviously know you've made a recommendation, client, let's say, is not buying it, you know they're making a mistake, you must come up with that, I wouldn't say maybe often, but in your career of 20 plus years, you must, I don't mean you bumping heads with the client, but where you could say, hey, George, you're definitely making a mistake, and you supply the information to help redirect them. What do you do when you sign up a policy that you know is a mistake? How do you ward that off or turn it around?
Um, well, I wouldn't do a life insurance policy that I knew was a mistake, but the main thing is the big mistake that people make is like when there's a correction in the market and they want to get out, and I'm um, trying very hard to convince them and show them all the history and the data and everything about why it's not a good idea, and how that it's best for them to stay in. And there's been a few times where only a few times really where people said, no, I'm going to get out anyway. And it turned out it was two specific times I can remember. And it turned out they got out at exactly the wrong time, because when they got out, then the market started going back up again right after they got out. And then I told them, how are we going to decide if you get out now, how are we going to figure out when to get back in? Like, I don't know. That happened on two specific occasions that I can recall. And both clients regretted what they did. But I've had other clients who, after something like this has happened, they said, thanks for calming me down and making sure that I stayed invested. They had friends who didn't, and they paid the price for it when the markets went back up.
So yourself as a planner and an agent, how do you decide to make sure you're okay and your family's okay being an expert in the field? Is there never enough risk management, or how do you satisfy yourself?
What do you mean?
Well, on your own policies and term of life insurance, whole or term, or your own financial wealth investments. How do you decide what you want to play with?
I'm just a client.
You're just
I
a
do.
client.
I'm my own client. I don't do anything different for myself than I do for clients. It's all the same. I have the same investments, the same insurance, the same everything, and it works for me. So, and it can work for a lot of other people too, if they're willing to listen. And a big part of this job is trust.
Yes.
And when someone trusts me, it's just something I've always had. If someone trusts me, I'm honored. If they tell me something and say don't tell anybody, then there's something as simple as that. I'm like, oh, I'm honored, and I would never tell them. And I'm just very. For me, it's a big deal to have somebody trust you.
Listen, we're almost out of time. What an information highway. If people want to connect with Pat Gibson, take a second and put out your social media ideas. If people want to take this a step farther, go ahead.
They can get in touch with me at patrick.gibson@ig.ca, or my cell number is 416-707-5959.
Pretty simple to remember. Folks, you've been listening to our show segment, Major League Broadcasting, MLB for short form. We've had a great guest today, Pat Gibson, who is a financial planner and involved with wealth management investment. Pat, catch up. We're going to catch up with you again. I hope you enjoyed it, and I hope you and your family stay well, safe under this pandemic we're going through. And take care, my friend, and we'll see you next time.
Thanks, Mike.